So Bitcoin as money. Money can be broken down into three major categories: store of wealth, medium of exchange, and unit of account. And I've further broken down these categories into its constituent properties, and I've added in a couple for the sake of future monies that is going to be required. So for example, censorship resistance is going to be an interesting trait for digital monies of the future, as well as programmability. So just a quick brief history of money. There are two types of money in the world at the moment. There's the ledger money, which you can think of as like the US dollar or Australian dollar. And then there's commodity money. And commodity money is things like gold and silver. They've been the predominant winners in terms of commodity money. But in the past, there's also been money in terms of seashells, rocks, salt, beef, wheat, for example. So ledger money is secured by trust. Okay, so there's trust required of a government or an issuing party like the central bank in order to not corrupt the ledger and not debase the ledger too much, which means not to print more money than is absolutely necessary. Commodity money is secured by physics, so one cannot spend gold twice because of physics, because you cannot print more gold. So if I hold a bar of gold and I pass that gold on to you, I no longer have the gold, and so nature is keeping a track of the ledger effectively by your possession of that money. When we look at how they're established, ledger money is in a top-down fashion, so it's issued by decree from the government. Okay, and so because you already trust that government, because you've elected that government into power, the money that the government issues or makes legal tender inherits that trust. Okay, so it's a very important point to understand with fiat currencies that trust is inherited by the government that has been elected and by the people. Commodity money doesn't have this inherent trust. It has to earn its trust over time because there is no issuing party. So it's a bottoms-up money. It's established and recognized by the people at large. And gold is largely considered the best money out of all the commodity monies because it is the most scarce, most durable commodity money. So the network has agreed through consensus that gold is the best commodity money historically. This is the pre-fiat era. Governance. So ledger money is centralized in its governance, and that is controlled by an issuing party, and so they can control the money supply. Commodities are decentralized in that no one has control over the supply, and it's actually nature itself that controls it. But also more important is that no one can make adjustments to the properties of your money if it's commodity money because it's decentralized. So if I hold a bar of gold and you hold a bar of gold and you start tampering with the properties of your gold, it doesn't affect mine. Whereas the ledger money, they can totally affect the properties of your money as they wish. So Bitcoin is an interesting case in that it sits in between both of these types of monies. It is uniquely a ledger commodity money. So it's literally a ledger, just like these fiat currencies are. However, the ledger is distributed over many tens of thousands of computers all around the world. And it's secured by physics. So energy is required. If you wanted to break Bitcoin, you need vast amounts of energy and computational power to do that. So it's actually secured by physics. So like commodity money, it's secured by physics. It's established in a bottoms-up fashion, so it's established by the people who are working out through consensus whether this money is legitimate or not. And its governance, like commodity money again, is decentralized in nature. So no one without your permission can adjust or make changes to your Bitcoin. You don't have to believe me. You can research this yourself and find out that it is in fact decentralized. It is the most decentralized digital money around. And in fact, like I said earlier, the US regulators and courts have also agreed that Bitcoin is decentralized to be classed as a commodity. So bottoms-up money takes time to mature. Okay, so bottoms-up money and top-down money have different go-to market strategies, if you like. They have different pathways to emergence. So bottoms-up money typically starts out as collectible because it's an interesting hobby and it's something that's unique and interesting. But then over time, it proves itself as a store of value because no one can print any more of it or create any more of this money. And once it's starting to prove itself as a store of value, and there's enough users who all agree that this thing stores value, it can then mature into a medium of exchange. It's extremely difficult for bottoms-up money to become a medium of exchange before store of value because it's not trusted. How do you know as a merchant that you're receiving this new money that someone wants to use? How do you know and trust that it will hold its value? If it doesn't hold its value, then you're going to have to sell it for another better money, and you don't want to have to take on that risk as a merchant. So the network effect has to kick in for it to become an accepted medium of exchange. And then once it's an accepted medium of exchange, it can become a unit of account, and this means that you price things in that money. So if you're in Australia, you'd price things in Australian dollars. If you're in the US, you price things in the United States dollar. So when you rank and compare the three different types of money, Bitcoin, fiat, and gold, Bitcoin's fundamental properties for store of wealth are extremely good. It's scarce, durable, verifiable, and has censorship resistance built into it. Medium of exchange is also at a fundamental level, has great properties, and this is particularly through its scaling ability, the layers that we spoke about earlier. It's portable, extremely portable, divisible, fungible, and programmable. Okay, but you'll be saying, oh yeah, but it's not a medium of exchange. Sure, maybe it has the properties of a medium of exchange, but it's not being used as a medium of exchange. That is correct, because it's still proving itself in the store of wealth phase, but also, and very importantly, it's actually good money, and it's because it's maturing, and proving itself as a store of wealth, it's being monetized, and that means the value of it is going up over time. And so we call this phenomenon Gresham's law, where regarding the circulation of money, bad money drives out the good. So when you have a good money, so money considered more valuable, and then you have bad money competing with bad money, money considered less valuable, the good money is saved, whereas the bad money is spent. So what you see in circulation is the money that is less valuable. You can see this as an example with gold and silver. Silver was the money that was in circulation more than gold. People stored the gold. It was more valuable. Why do you want, if you've got a choice to spend something, to offload something in your possession, why would you offload the good money first? You offload the bad money as long as someone's willing to accept it, right? It's kind of like a game of hot potato in that sense. Then over time, Tears law will kick in. So regarding circulation, the good money eventually drives out the bad. And this is effectively because it's forced upon people to start having to spend their good money, because the bad money has lost its value. And it's lost its value typically through hyperinflation. And then because it's been hyperinflated, it is no longer accepted, and then you're forced to use the good money. So during Zimbabwe's hyperinflationary period, many citizens resorted to using US dollars despite their prohibition, and many foreign currencies also were circulated in the Weimar Republic during the 1920s. So there's many good examples out there of Tears law in practice. And you can also see this, had seen this in El Salvador and Argentina. And then finally, for unit of account, Bitcoin doesn't tick any of these boxes yet because it's quite volatile, so it's not stable. It's becoming trusted, so it's in that process of being trusted. It is trusted to some extent by a few million people, but it's not trusted at large for it to become a unit of account, and then obviously it's not as an accepted unit of account, whereas fiat ticks all those boxes. And gold does do well in its stability and it's trusted, but it's not a largely accepted unit of account. So we can tally up the result of this comparison. Bitcoin is coming out on top with green on 8 of the 11 properties. Fiat or dollars coming second, and then gold last. The good thing about Bitcoin is that the areas it needs to improve on can and will happen over time. So it's things like it needs more trust, right? So that's only a time thing, and it needs more stability. So that'll happen when the size of Bitcoin gets larger, and then it will need to be accepted eventually. So that's just a consequence of the network agreeing upon it as a unit of account. Now, fiat, in order for it to compete with Bitcoin, it needs to become more scarce, but that's sort of the antithesis of the economic system that it's in. So that would be quite unlikely, I'd say. And then censorship resistance is very low, and I think that's for political reasons. They want to be able to censor, so there would have to be a sort of a change in policy for that to happen, but it's possible. Gold is not easily verifiable, it's not programmable, and at the moment not accepted, but that could change. Another dimension to look at and compare these three monies is how easy is it to transfer value over space and time. So gold, for example, not easy to send gold across the world. Right? That's what I mean by space. It's very expensive and dangerous and risky to move large amounts of gold. But it is good at sending value over time. Okay, so really great at sending value over the single dimension of time. Fiat is great at sending value over space. It's very cheap and easy to do compared to gold. But over time, it's not so good because it loses its value due to inflation. And you wouldn't want to hold dollars for more than a couple of years, for example. Bitcoin, on the other hand, is great for sending value over space. It's incredibly cheap and fast, but also great at sending value over time. You can send Bitcoin 1,000 years into the future and it will retain its value. Again, if you don't believe me with these properties, that's fine, but I encourage you to do your own research. So because Bitcoin is going through its store of wealth phase, I thought it'd be good to sort of focus on this a little bit and also to show you why Bitcoin is incredibly important in the world. So how people typically in Australia, New Zealand, Canada, the US store their wealth is not through money, but actually through real estate or property. Okay, so this is the property price index for Australia. It's up and to the right, and it's been particularly good store of wealth since the year 2000. And the reason why people put their money and wealth into homes and real estate is because it's a scarce, desirable, and secure asset. And it's secure because in Australia we have strong property rights. New Zealand we have strong property rights. Canada, the United States as well. We have very strong property rights, which means we have effective and generally low corrupt politicians, legal system, police, justice system, and military or defense force. The ownership of your home is literally a ledger on the government's database. You need strong property rights. So you need an effective and low corrupt police force and military, both to defend against local thieves or criminals, but also defend against foreign adversaries like foreign militaries invade and take your resources. So because we have strong property rights in Australia, we can store wealth in homes because it is largely protected by the system. And the reason we need to store our wealth in homes is because we have a phenomena in the economics system today called monetary inflation. So I've just added a new chart here of the money supply in Australia, and it is increasing, and particularly increasing more so from 2000, 2001 onwards. And so you need to protect yourself against the debasement of the money. So you don't want to hold the currency. You actually need to store your wealth in real estate. Now, this phenomena is the same across all of the other countries that I mentioned: New Zealand, US, Canada. They all, the property prices track monetary inflation. You can also see this phenomenon carrying out with the indexes, the stock indexes. Here I have the S&P 500 index overlaid with the monetary supply. And so again, people are using the indexes and the stocks and companies as a way to protect themselves from monetary debasement. In fact, if you divide the total market cap of the United States stock market by the M2 money supply, you'll notice that actually it's not a 10,000% increase as it looks in nominal terms. It's actually roughly a 66% increase in purchasing power that someone has received over sort of 40 years. Okay, it's large. For the most part, it's just protecting your wealth against monetary debasement. As long as this debt in the government balance sheet continues to rack up, as it is today, we're going to have to continue to debase the currency in order to pay for this debt. So that's why this meme is true, in that there is no top when it comes to real estate prices. There is no top when it comes to the stock market, nor is there no top when it comes to the price of Bitcoin, because there is no bottom when it comes to the value of the currency. Unfortunately, though, many countries in the world don't have strong property rights, and those citizens within them don't have the ability to store their wealth in many good assets. Okay, so places like Zimbabwe, Venezuela, Lebanon, Sudan, Argentina, Turkey, they can't just put their money into the US stock market. That may not, the infrastructure may not be built in those countries for that to even happen, or the local governments won't even allow that to happen. And then property, if they wanted to store their wealth in real estate, there's a high chance that if it's of any value, it will get confiscated either by the government itself or by warlords or local gangs. What do these people do? They are forced to have to try and find US dollars in a lot of cases. They try to find US dollars in order to store their wealth in, or they suffer from hyperinflation of their local currency and effectively get poorer. There are estimated to be roughly 250 million people affected by hyperinflation each year, and 2 billion people are unbanked, and so it's extremely difficult, makes it extremely difficult to run a business or make and receive payments safely. And they're estimated to be 5.7 billion people living under autocracy. So any ability to protest or speak freely risks financial repression. So what Bitcoin offers the world, especially the world where we have 4.3 billion people who are using a smartphone with internet access, is a home, a digital home, if you like, where they can store their wealth and protect against inflation. It also gives them a bank or a digital bank, so they can actually start to run their own businesses without fear or risk of theft, and also gives them the confidence and freedom to protest and speak freely, or even just vote with their feet and move countries with their wealth intact. That's what Bitcoin offers for the people of the developing world. So we just have a quick look at the countries with the highest use of cryptocurrencies. A lot of these countries are the countries that are experiencing these problems that I mentioned, and that is why they're using digital monies like Bitcoin and stablecoins, which are just digital versions of the US dollar. So yeah, they have a high need for this type of technology, and that's why they're typically using it more than us in the rich, developed world. There is a myth that you might hear that Bitcoin is for criminals. For every $1 spent in money laundered with Bitcoin, $800 is laundered with US dollar. It's actually very poor It's actually a very poor idea to use Bitcoin for criminal activity because it is a open it is an open protocol, so it can be tracked by government agencies quite easily. Important to note that so it's not anonymous, but it is private. And so the difference between those two is something for another day, but it doesn't mean you lack any privacy with Bitcoin. There are ways to make it private, but it doesn't mean you're anonymous. So if governments want to work out who you are and how you're using the Bitcoin, they can, especially if you've KYC'd AML exchanges. It makes it a lot easier. But that's a topic for another day. So we've discussed that Bitcoin is an emerging store of value and has the potential to become a medium of exchange, but it's not being used as a medium of exchange yet, and it's certainly not a unit of account. So how does it get to becoming a medium of exchange and a unit of account? Well, we need to ensure Bitcoin maintains high uptime. We need to educate people as to what it is, and we need to keep building solutions to make it easier to use, but also more scalable so more people can get access to the protocol. Bitcoin is volatile at the moment, like I said earlier, because it's actually just so tiny. The asset class is just so tiny compared to the rest of the assets that it's bumping up against. So Bitcoin is like this small, tiny rock pool located next to a violent ocean, which is the world's currencies and the world's wealth in other assets. And when that wealth starts to pour into Bitcoin, it becomes quite violent, and you lead to this high rates of volatility in the Bitcoin price. Because Bitcoin itself is highly transparent, and you can predict way out into 100 years, into 2140, the full-on issuance schedule or the monetary policy of Bitcoin is known forever, really. It's all public knowledge, it's transparent, you can verify that. So it's nothing inherent about Bitcoin itself that makes it volatile. It's more the users interacting with the protocol that makes Bitcoin volatile. And that's typically fear and greed. People sell when it's down, and they don't understand, and also it's worse because they don't understand what Bitcoin is, and so there's an ignorance to it. So they sell out of fear. That creates very low lows, and then people get greedy as well when the price starts to revert, and they buy in at all-time highs, and they get greedy, and the price gets blown way over its expected valuation. So Bitcoin does require a lot of education, and this is what I'm trying to help people understanding what Bitcoin is so that they don't sell out of fear or ignorance. We've also, in the last cycle, had a lot of bankruptcies in centralized companies who provided access to Bitcoin and provided financial products around the ecosystem, but they over-levered themselves and they went bust. So that was like BlockFi and FTX and Terra Luna, and this unwinding of all the leverage, they're effectively, I like to call them degenerate gamblers. This unwinding led to extreme Bitcoin volatility and sell-offs because they were effectively just scammers carrying out illegal activities, and as a result had to sell off their Bitcoin, and then it dumped the price. But the good thing about Bitcoin as itself was that these scammers couldn't prevail. No one could bail them out. Bitcoin didn't bail them out. If you carry out scammy conduct, you will be destroyed if you're trying to do that on the Bitcoin standard. So that is the good thing. It weeds out the scammers from those who are trustworthy. When you're interacting with Bitcoin, dollar cost averaging is key. I'm trying to illustrate here. If you bought Bitcoin at a monthly timescale, so every month, this orange line would be your experience with Bitcoin. It would be far less volatile. So if you can remove the emotion of buying the highs and selling these lows and just stick to a plan over a long time frame, your relative experience of volatility reduces significantly. I also hear this a lot from people who sort of don't understand Bitcoin, is what is it backed by? So to understand this, you have to know that this term was invented in 1913 when the Federal Reserve notes were to be backed by gold. Because they were issuing Federal Reserve notes, they weren't issuing gold. They had to be, people didn't trust it, so they had to be backed by something people trusted, and that was gold. So what is gold backed by? Well, it's backed by the properties, its monetary properties, store of wealth, medium exchange, unit of account, and by the users or the network of users who all agree that this has value, which isn't, it's not an illusion. Gold has been tested over millennia for its monetary properties. And so it's emerged as the king money for natural money. And so it's not like these people are in some sort of collective delusion or it's some sort of hallucination. You cannot print more gold. If you could, it would no longer be money. So its properties, along with the fact that the people realize its properties and understand its properties, that's what backs gold as a valuable money. So what is Bitcoin backed by? Again, backed by, like gold, its monetary properties and by the network of users who agree and have verified these properties to be true and real. Now, these users are smaller than gold at the moment, but they are growing once people sort of understand more about what Bitcoin is. What is fiat backed by? It's not backed by gold anymore, but it's backed by its monetary properties and by the network of users who agree that it is of value. And these users, for example, in the United States, are the US citizens. People say it's backed by the government. No, it's backed. It is in a way, but it's also not. It's backed by the government, yes, but the government is backed by the people. So fundamentally, the US dollar is backed by the people who back the government who issues the currency. Bitcoin just cuts out the middleman. Bitcoin is a money that doesn't require an issuer, and so it just cuts out the middleman as long as the people decide that it is of value. So what is the big idea here? Bitcoin is ledger commodity money, secured by physics, established in a bottoms-up fashion, and distributed in a decentralized fashion. So like a home stores wealth and protects you against monetary inflation, Bitcoin can also offer that solution. It can also give you a type of bank account. It gives you the freedom of speech and the freedom of protest against autocracies. That's what the promise of Bitcoin offers the world's 8 billion. So Bitcoin is emergent money going through its store of value phase.